programs which you're using which require any of those resources, like TweetDeck or Skype or something like that open, it's worth actually shutting them down, and that way you should have pretty much uninterrupted reception of the broadcast itself. So again, just to welcome everyone, it's Sunday the 13th of December 2015, and we're coming up right now to the end of the year. I just want to do a quick poll. Actually, there's quite a few guys here present in the room now, so I just want to do a quick check. Are there many of you here who are attending one of my webinars for the first time? I'm assuming quite a lot of you probably subscribers from the website, I guess, but if there are many of you who are attending for the first time, okay, right, so what I'm going to work through today is we're going to do some market analysis and maybe make some forecasts for expectations about how price might develop over the coming weeks leading up to the end of the year. It's quite an important week this week, actually, because of the several bombshells on the economic calendar. So we do have the week kicking off with Draghi from the ECB as a speaking engagement tomorrow. On Tuesday, we have the monetary policy meeting minutes being released from the Reserve Bank of Australia. We also have UK CPI data, which is usually good for intraday volatility. On Wednesday, we have the UK labour market report, and probably the one that everyone's been thinking about with later on Wednesday evening UK time is the FOMC rate and statement and press conference, and there does seem to be a general consensus, and pretty much there has been the entire year, every month and at every FOMC, that this will be the one at which they raise rates. So currently they're floating between 0 and 0.25, and the expectation is that they will raise the ceiling on that to about 0.5%, and there is a general kind of consensus now in the market that this will be the meeting at which that happens. Now, as far as price movements in the markets have been concerned, we've seen quite a reasonable amount of volatility, and particularly on the dollar crosses. It's been quite interesting that we've seen the dollar weaken leading up to this interest rate announcement. So if it happens that they go with the expectation, we think we're going to see a resumption of dollar strength. But if it happens that they don't, then I think that will probably shock the market quite a lot, because every indication right up to this point has been that this is the meeting at which that rate rise will happen. So Wednesday is quite an important one, and then the week closes on Friday with a release of monetary policy statement from the Bank of Japan, and they've been relatively. We've not really seen very strong market reactions to releases from the Bank of Japan recently, and so would expect for that trend to continue. All right, so that's the economic calendar, and I always look at the economic calendar at the beginning of the week. I'm not really a fundamentalist trader. I think we talked a little bit about that last week, but it always helps to know the high impact events which are coming up during the course of the week, and that can allow you to plan for volatility. So we're not necessarily going to be flat while any of these news releases are occurring, but if you are in a position and you know that there is potential for volatility, as well as having that healthy fear of losing a lot of money at that time, you can also be quite hopeful that when there is volatility, there is going to be an opportunity to make a lot of money also. All right, so let's turn our attention towards the charts. I'm looking at a fair few number of charts this evening, actually before the market opens, and I'm just going to talk through my general expectation for price movement over the course of this week. And mostly what I do when I'm forecasting is I make interpretation of current price behavior. That's really important. So we need to have a forecast. We need to have an idea of what the price is doing right now, whether the price is rising or whether the price is falling. And as well, we need to know the invalidation levels. We need to know the corroborating evidence, and at what point we would consider that basis to have been invalidated. So I know a lot of you attending for the first time. So I said a little bit of a framework for the nature of the analysis that I present. And I think if we work through the Euro USD as a case study, it would probably be quite a helpful example. All right. So first up on screen is the Euro USD, and the first thing that strikes me about this particular instrument is the rally that we saw develop from the beginning of the month. So we saw quite a strong rally there at the beginning of the month, and as well we've seen a little bit of follow through to that. And I think that it doesn't matter whether you're right up against the screen or whether you're standing a distance from the screen. What should be rather obvious actually is that once that rally happened, a support formed here that is coming in around the 108 price handle. So Euro USD has rallied, a support is formed, and that support is at the 108 price handle. So immediately, as far as the bias is concerned, and I'm just kind of noting that the month opened at 105.80. We have a bullish month so far. We have a support which has been established at 108. And so what we're saying is that so long as the price on Euro USD remains above this 108 price handle, then from a technical perspective, I would consider that the bulls are actually in charge of this particular instrument. Now, having deciphered that from the most recent price action, that the bulls are in charge, and it should be an obvious statement in any case to see that the price is rising, but we've technically determined a level for support, and as well we're looking at the direction of the flow. We can see that the month has a positive trajectory, and as well last week had also a bullish close. There's last week's open, which is marked there, so you can see that distance there. We had a bullish close last week also. Right, so quite cleanly deciphered there, but it doesn't necessarily mean that I'm interested in trading the Euro USD long. Actually, what I'm believing is that there is still a case for significant dollar strength. When I say significant, I don't necessarily mean tens of thousands of pips at this stage, or even 4,000 or 5,000 pips, but certainly I would not rule out the Euro USD at parity or just sub parity 98, 97 handle even over the course of the coming weeks. But what would be required in order to bring about momentum in that direction? I think the key trigger event, one of them, is this week. It is going to be the FOMC rate and statement, and I think that if it happens over the course of this particular week, that we see the Euro USD relatively steady, but you end up getting a huge bearish daily close following that FOMC announcement. And if it happens that the FOMC actually raise rates, okay, so we're looking at now what I call trigger conditions. It's one thing to have an analysis, but analysis on its own doesn't really lead to a trade, right? You can have an analysis, and until that analysis is confirmed by something that the price is doing, you're not going to be initiating a trade. So here, I'm minded to look for further dollar strength. but I need something in order to confirm that. And as a confirmation, I'm going to be looking for a bearish close on the Euro USD sub 108, where support has been established based just upon the current wave. And if it happens that on Wednesday, Thursday, we get that bearish close and the Fed have raised interest rates, then I'll be looking short the instrument following that daily close, looking for a follow through to the downside on Euro USD. And prior to the Fed announcement on Wednesday, I'm quite happy to be considering any rally north on the euro for the time being to be a counter trend, rally. So it could very well happen that the euro carries on rallying and she goes and runs another 1,000 pips north. That's okay. I may end up missing the trade, but I don't lose anything in the process. But once my bias is confirmed by the price action and I see those trigger conditions being created, then at that point I'll be quite happy to, and I would feel quite justified in initiating a trade in line with the bias that I've established here. So Euro USD, currently it's very clear that the bulls are in charge. I would consider that to be invalidated once there's a daily close below 108. And what I would like to see is actually for that to happen in conjunction with the Fed raising rates on Wednesday. If all of the stars align in that kind of sequence or in that kind of order, then I think there will be a certain inevitability about future dollar strength. And if it doesn't happen like that, then we don't risk anything and we don't lose anything either. All right, so Euro USD still looking quite stubbornly, I guess, at this stage for dollar strength. Although December, as a rule of thumb, typically, I think if you're going back the last 6 or 7 years, and you look at the month of December, you'll usually find quite significant swing in favor of the euro during the month of December itself. But still, there's time here, and we're going to see how that plays out. Incidentally, this week I was speaking to a risk manager at one of the major Swiss investment banks, and what he was telling me was that the bank is completely flat at the moment on equities, forex, bonds, options, everything. They've either closed off all positions or they've put a hedge against everything, and so they have near zero exposure to the markets. They're preferring to hold cash until after the decision from the Fed. And there's a lot to be learned from some of these investment banks. They tend to be generally quite profitable. We are approaching that time of the year where liquidity does tend to dry up. I'm off on holiday from Thursday, and I won't be back until the new year. So got to take a leaf out of the book. But that too is something which is worth considering. All right, it's you've got to kind of look at the event risk and say, if you're not clear about what the technical picture is, then it's probably better to be doing nothing rather than exposing yourself to a market, particularly when those kind of event risks are just around the corner. All right, let's take a look at GBP USD. Right, so GBP USD, I'm on the daily time frame here, and considering we're coming up to the end of the year, I guess it's pretty good to come out with a little bit of a kind of wild card analysis too. Right? Why not? So some interesting thoughts on the pound, and whether we should have a expectation for the pound to strengthen or not. Right? So last week we saw quite a strong rally on a lot of the cable crosses in particular. pound Canadian, pound Aussie, right? So we had an analysis for pound Aussie long last week. That went in value to the tune of maybe 400 or 500 odd pips, and we've seen quite a lot of strength, particularly on the pound crosses, more so than on the pound dollar. But even on the pound dollar, quite a significant rally there from December lows, right? So up almost 300, up to almost 300 odd pips, and then there was that IMF report last week, and that caused some volatility spikes on the instrument too. But I was thinking of something from the recent budget in the UK, and I thought it'd be interesting to maybe try and decipher what the Treasury is thinking about and what the Bank of England may be thinking about. And so one of the things which happened at the during the previous at the last financial statement and the last budget delivered by the British Chancellor George Osborne was he announced a measure whereby they would be raising the stamp duty, which is the tax we have to pay here in the UK when we buy a property on any property which is not your first. So if you're buying a second property onwards, then you would pay an additional tax on the purchase of that second property. Now, the current levels of stamp duty in the UK is roughly about £3,000 on a property which is worth about 250k, and that tax has been raised to a level where you'd be paying almost £10,000 on a £10,000 stamp duty tax on a property worth about 250k. Now, the UK property market has been overheated for a while, particularly in the south, but the north isn't really that much of an exception, especially once you get anywhere near any of the urbanized centres in the UK. And the purpose of the measure is to take the heat out of the housing market, to prevent buy-to-let landlords from buying the current housing stock, because not enough housing stock is being built or developed, and as well, people who can afford to get to buy a second property cash, or to go and get a mortgage in order to buy a second property, can afford a third and a fourth and a fifth, usually, or have that kind of credit available to them, and they are actually the driving force between the driving force of higher property prices in the UK. Right, so he's introduced this tax in order, as a preventative measure, in order to remove these people from the market. And just to kind of give you an example, that amount that you're paying in stamp duty on a 250k property is pretty much close to what you would collect the first year in rent from that property. Right, so he's charging you almost the first year's rent for going and making that move. Now, the reason it was interesting to me, and I've been thinking about this over the course of a couple of weeks, was that some months back we saw a similar measure being taken by the Reserve Bank of New Zealand. And what the Reserve Bank did in New Zealand was that they raised the deposit requirements for people wanting to purchase properties in Auckland, and again, it's layered. So if you're buying a second property or a third property, the deposit requirement is even higher. And they did that several months ago in order to cool the housing market. Now, the question is that what is the traditional tool which is used by the central banks in order to cool the housing market, right? So, I'm going to have that Ferris Bueller moment here. Anyone? It wasn't Ferris Bueller, it was his teacher. I hope a lot of you guys are old enough to remember Ferris Bueller. If you haven't seen the movie, go watch it tonight. Get on Netflix, right? But what is the traditional tool which is used? This is a poll question here. I'm not moving forward until someone answers. All right, here we go. Dan, thank you, mate. All right, saved me. All right, so it's the interest rates. Actually, George has come with the right answer. Sorry, Dan, you have to go back to school, mate. Is that the Luton, Dan? Okay, right. So the traditional tool which is used by central banks in order to control the housing market is or are interest rates. Okay, and here is this unique measure. Here's this unique measure which has now been introduced as a form of taxation in order to impact that same market. Now, the Reserve Bank of New Zealand did that several months ago, and what did they do at their last meeting? Right? What did it allow them to do? What it meant was that they could reduce their interest rates further. So at their last meeting, I think they've cut now to 2.5%. So they cut another quarter percent, 25 basis points off it. They're down at 2.5% now. It allowed them, in order to drop the rates even further, without an expectation that that is going to lead to a further heating up of property prices and a property bubble in New Zealand itself. So it strikes me as interesting that the Chancellor would take that measure here in the UK, because what it then means is that you are giving the Bank of England scope. Hey, you know, if you want to keep interest rates lower for longer, you can. All right? If you want to keep it lower for longer, you can, because we found another way to take the heat out of the housing market. So, and it's a thought. You know, it's just a thought which I've been playing with in my mind. So then if we look actually at the history, and maybe we need to go to a little bit of a higher time frame here. So this is the daily on GBP USD, and here we are back in 2013 when Mervyn King said that that's far enough, and you know, he considered the pound to be undervalued here at pretty much exactly the 48.40 or 48.30 mark. He considered it to be undervalued, and here when the price rallied all the way up to that into those 70s, we had Mark Carney actually talking up the pound and talking about how an interest rate rise was imminent. He did that all the way through 2013, and then eventually we had Broadbent, who's the chief economist at the Bank of England, come out and say, actually, you know what, I don't think we're going to be raising rates until the tail end of 2014. So 2014 has gone, and 2015 has pretty much gone now, and it doesn't really seem that we're any closer to the rates being raised in the UK, right? So there's a little bit of a fundamentalist argument which might suggest that if the Fed does move first, and that seems to be pretty much inevitable now, right? That the Fed will move first. If they don't do it now, they're going to do it in January or February, but they will move first. There is no rush for the Bank of England to do it. If you remember, the Fed started tapering their asset purchase program first, and now that the asset purchase program is all wrapped up, they're talking about raising rates. The Bank of England hasn't even started tapering the asset purchase program. It's still there, 375 billion per month, right? So what are the signs? What are the signs? Is it that they're going to follow in quick succession? Maybe not, all right? And so there could still be scope for much further pound weakness, and maybe just a little bit more dollar strength on the GBP USD yet, right? So there's the kind of Jackanory fairy story. What we really have to do, though, is to marry that up with some technicals. And what I'm looking at actually on the GBP USD is that there is a falling channel on the daily time frame. You can kind of see that there, and you might even narrow it something like that. But if it happens that we can get a daily close below the lower wall of that falling channel, I think that that would be quite a strong trigger, and it would act as a perfect confirmation to say that we are going to fresh lows. Now, I know there's that whole thing about what King had said back there and the importance of this level, but we do have a new governor now, and what if he does see things a little bit differently, and what if the world is about to come to an end? You never know. These guys, they know things we don't know about. So what would that being the case, what I need is just a trigger condition, and I think the lower wall of that channel on the daily GBP USD would make quite an effective trigger for short, and then we can look for a significant swing and follow through to the downside, which might even take us back into the lower 30s, right? So when I say lower 30s, I'm talking 32, 33, and if she goes sub 30, it really would be opening a door to something else, right? That would be something quite crazy. It does seem that the market has been satisfied with these levels for a while, so we don't necessarily have to be thinking about millions and millions of pips, and sometimes I do talk about tens of thousands of pips, but usually I've banked a position by the time it's reached a few hundred, right? So a break of that lower wall, and I think it will present some opportunities for further downside on GBP USD. Given that it does actually trigger, again, if we just see her rushing off north, nothing ventured, nothing gained, but nothing lost either during that particular process. Okay, I'm going to come to pound Canadian in a little while, Amit, so I actually have it on my notes to take a look at that, so I will come to it. But I'll just work through it in the order that I've got right now. Okay, next one up, right? So I'm spreading the Christmas cheer looking at the pound dollar. Right, dollar Swiss. Dollar Swiss, I'm on an hourly time frame for this one. The last call which I had for dollar Swiss was to shorter on the break of on the break of the channel, and she's done pretty much exactly as was expected. So she's fallen there from the 103, 102 price handle, and almost went into that 97 handle. I think she was just shy of headed into the 97 handle by a couple of pips there toward the tail end of last week. My general kind of expectation now is, the dollar Swiss is very much inversely correlated to the euro dollar, and so the expectation that I have for the dollar Swiss is the same, you might imagine, right? So the instrument is falling right now. As far as the technicals are concerned, that fall is a little bit easier to chart here on the dollar Swiss than it is on the euro USD. So we see the direction is down, the instrument continues to fall, and again, what I'm actually going to be looking for this week is just a little bit of follow through to the downside. She needs to reach 97, right? 97.20. I'd say that she needs to be just below the quarterly open. But if she can do that, and then if we can get an outside bullish day following the Federal Reserve announcement, if they raise rates, okay, so it's not just the announcement, but they need to raise rates, and then we get a dollar bullish day on the dollar Swiss and a euro bearish day on the euro USD, but sticking with the dollar Swiss, this would become my trigger to start buying dollars, and the expectation would be again for a significant rally to the upside. And we could expect 105, 106, 107 even to the upside on dollar Swiss as we head into the new year. This channel wall that we had marked for the bridge, right, from a few weeks ago, and our short position for the dollar Swiss. The upside target would be the underside of that particular. It would be the underside of that particular wall, right? That would be the target to the upside. So, we have our bias, we have our trigger conditions. I'm not trying to mix it up on the analysis. Right now, what's going on in the markets is very much a pro-dollar or anti-dollar story. All right, so the story is about the dollar. If you remember the yens from a couple of years ago, when all the yens were rallying, and you're looking at, if you're looking at euro yen, pound yen, dollar yen, Kiwi yen, Aussie, it didn't matter which cross you were looking at. The story was about yen weakness. It was a yen story. We had Abenomics, and we had the Bank of Japan intervening in the markets until they bought the yen to a level that they were happy with. And so right now, what we're looking at as far as the majors are concerned is a dollar story. It's all about, is the Fed going to move or not? And so whatever happens, whether there's dollar strength or dollar weakness, what you're not going to be doing is to be buying dollar Swiss and buying euro USD. They're pretty much moving according to their standard correlations right now. If the dollar is strengthening against the euro, it would be reasonable expectation for it to be strengthening against the Swiss and to be strengthening against the pound as well at the same time. Right? So it's pretty much a dollar story as far as the Swissy, the pound, and the euro are concerned. And I think that you don't want to find yourself overexposed to the dollar across those, right? Because because the correlation is now so directly with expectations about what the Fed does. So that's the dollar Swiss. As far as the current flow is concerned, I think it's quite obvious. It's a bearish month there from the 103 price handle. Again, last week we had a down move, so we need that strong bullish outside day in order to confirm that the dollar is going to rally, and that would become a trigger condition to start placing long positions on this particular pair. USD JPY. All right, so this is the only one where I'm going to be a little bit out of sync with what everyone else is kind of thinking, which is that I think that the USD JPY has actually topped out. And when I say topped out, what that means is it's all right. I haven't been drinking. All right, so I have it's coffee. It's driving me crazy, but she has topped out, right? And it's an assumption. You can even call it a rule of thumb kind of assumption, right? Rule of thumb assumption. We make that assumption that the USD JPY has topped out. All the strength that the USD JPY was going to have, it has had. And out of all of the dollar crosses over the course of the last couple of years, it is probably the one that has priced in the Fed's interest rate announcement the most, right, out of everything. It's priced into the dollar yen more than it is into the euro, more than it is into the pound, for sure. Okay, so the pound has hardly moved, 10 to well, like 10%, right, from highs. Okay, so 10 to 20%, but from high, not that significant, 10 to 15%. The USD JPY a few years ago was at 0.7. All right, it's almost halved in value over the last couple of years, right? So you can kind of see here on the weekly, right? The low was 0.75. We're at 120 now, yeah. So even we would say 30 to 40%, right? It's quite a lot. It's not it's not insignificant. So what I'm looking at here is a bit of a rude thought, and I hope it never gets translated into being just a brain fart. But what if this here is actually that? Okay, what if it's a double top? Okay, and what that would mean is that the longer that the price stalls here without being able to break back up towards the 126 price handle, the more likely it is that there is going to be a collapse in USD JPY, and to the downside, we're going to be looking at a pretty insane target. Actually, we're going to be talking about a correction which extends as deep as the 107, 108 price handle. So that's where the USD JPY is going. As far as the trigger conditions are concerned, I think she's not going to go there in a day. All right, so there is time for this, but I'm starting to get that kind of indication. I'm starting to get that idea that maybe she's ready. Maybe she's ready to roll over, and so we're seeing some support there becoming resistance. I'm just going to start zooming in now. All right, but we're seeing here, let's capture that again. All right, so we're seeing here some support become resistance. Okay, and there is a previous support there which has become resistance. So even if she fakes out, even if she rallies, what I would be looking for, any strong bearish week, and I think from these upper 20s, so from the 23, from the 22, okay, any strong bearish week, I'm going to be looking for follow through to the downside, and I think eventually what might happen is we will have something that started off as a intraday short, maybe just as a scalp, but it ends up turning into the position trade of 2016. All right, so where is it? Dream big, fall hard. I don't know. What's the motivational saying for dream? Dream big, fall flat on your face. I think that's the saying when you're a forex trader, right? But there is potential here. There's room here. It's a little bit of a stretch, I know. All right, so but actually, hang on a second, right? The Bank of Japan has said they're actually quite happy with the yen at current levels. Right? They've already said that they're happy with the yen at current levels, and what it means is that they're not really interfering right now in the dollar yen, and you can kind of see that. You can see that how flat she's been pretty much through from the tail end of 2014. So pretty much a whole year now, we've had this flat kind of price action, and when markets go flat, typically what happens after that is they tend to roll over, and so that is what I'm looking for on USD. That is what I'm looking for on USD JPY, just for her to roll over. What a trigger condition might be, that's a different question, right? So usually I would be looking for flow, right? Say, hey, is the month on my side? Is the week on my side? And if the flow is on your side, you can really go wrong with a trade, right? The worst type of trade you do is when you have a huge bullish day and then you're trying to sell into it and the day carries on being bullish. Or you have a huge bearish week and you try and buy into it, you'll usually find that the week carries on being bearish, right? So, if it's a bearish day or a bearish week or a bearish month and you try to sell into that, likelihood is you're going to make some pips because there's an idiot on the other side who's buying against the direction of the flow, right? And that is effectively the flow. That is the best measure of sentiment in the market. So if she rolls over from here, there could be a lot of pips to the downside. There are ways actually to strategically look for those shorts. So, if you don't mind fading over the space of a few hundred pips with small insignificant positions, but with a view that once the price has gone sub 20 or sub 117, then at that point you can add a little bit more and add a little bit more until eventually she makes that target. That's another way to do it. But for now, I'm quite happy to be wanting to believe that she is ready to roll over. Again, it's just a question of coming up with a trigger condition that would satisfy me. All right, I think that's really the main issue here. Just coming with a trigger condition that satisfies me to say, sell and hold. All right, that's what I've been looking for. So maybe wait until post-form, see what happens. But if we see a rally up towards those 25s, 26s, and then failure from there, I think that would be prime cause for entry. All right, so it's just something which is a little bit out there. It's a little bit like my pound dollar analysis. It's a little bit out there. All right, but if we start seeing it play out, if we start seeing her falling, and it doesn't matter if we miss the first 1,000 pips, all right, and we come back next week and she's at, she's at 110 or something, we'll still be able to pick up the next 300 as she makes her way to 107, all right? So, the best confirmation you can have is when the price has already moved a few hundred or even 1,000 pips in the direction that you're expecting for it to move in, right? What could be a better confirmation than that, right? So, so I don't mind kind of missing it. The more she moves in the direction that I expected her to move in, the more I would consider that that actually confirms my original analysis or the original forecast which I'm making, and that would make me even more confident to get involved in the trade at a later stage than it does at the beginning stage. So right now, it could all turn out to be a fairy story, and it doesn't happen, and instead we end up seeing USD JPY rally another 1,000 pips higher, right? But once she started falling, what better confirmation could we have than that the price has already proved us right by actually moving in that particular direction. Okay, so so that's the USD JPY. Okay, sorry, Roger. How can I get it? Okay, sorry, Roger. How can I get it? Were you asking about USD JPY? How can you get in USD JPY? If it is, then I think I've addressed that. If not, you might need to just explain the question again. Okay. A few others I think that we already take a look at. Yeah, the free pro trader bonus. Okay, right. So if you go to the Aura FX, so Aura FX are probably is one of the best brokerages around right now. I have a very close relationship with the team there, and if you go to Aura FX and you open a live account with them, then they will give you a lot of bonuses, including access to my weekly analysis and trade advisory service. Right, so it is worth checking out. I highly recommend it to everyone. This is a sponsored announcement. lightweight. All right, but check it out. They are fantastic. A bunch of guys there to be working with. In fact, I can see a few people here. I know whoever counts with Aaron. I'm sure that if you needed referrals or testimonials, everyone who has ever dealt with them is always very, very happy to do so. They're a boutique brokerage, and they really pride themselves on giving a high level of customer service. And if you've never been with them, you probably have no idea what customer service means from a brokerage, right? I really couldn't praise them enough. Okay, so moving swiftly on from our commercial break. All right, and so next up, I think I want to take a look at is Aussie dollar. All right, so Aussie dollar. I'm actually now I was going to be a little bit careful this evening rather. I don't usually construct my trade plans before a Monday morning, so I usually allow for the markets to open and let the market develop a little bit of structure for 10 or 11 hours or something like that, and then I sit and look and devise some trade plans. But the Aussie dollar is the only one where I'm quite confident about looking for a short position early on. Again, I wouldn't actually be keen on initiating anything until the London session begins tomorrow morning, so I'll be looking early during the London session. But over the course of the last couple of months, compared to the Euro USD and compared to the pound dollar, so if we just quickly kind of flick over, you'll see October, November, pretty much the whole of the quarter, the euro was falling, and similar story with the pound. That she was quite weak during the course of October, November, and coming into December. The Aussie dollar, on the other hand, was quite strong and maintained bullish quarterly flows on this particular instrument, and we saw something similar on the Kiwi. All right, so if you're looking at NZD USD, again, quite a lot of relative strength over the course of this quarter against the US dollar, despite the fact that we'd seen weakness on the euro, weakness on the pound against the US dollar. So I've had this kind of general expectation where I'm looking for these two instruments in particular to roll over. And what I'm liking about the Aussie dollar right now is just something like this. All right, that's all it is, right? So just a little wall. I'm going to mark it a little bit cheekily to show that it's already been breached, but you've got to maybe incorporate that entire block actually, and another support wall just to kind of take last week's low into consideration. You can't ignore that after it's formed, but my expectation now is that actually I would think that there's going to be another little suckers rally, I would call it, a little suckers rally, and then the price will actually come down, fall below those walls. Once she's below those walls, that becomes a short trigger for me, and I'll be looking for a follow through to the downside into the lower 70s to begin with, as it'll be quite a tight trade, and so this will be something in origin that I'll be looking at more on a intraday basis rather than a position. Remember, you still have to have that little bit of caution ahead of FOMC. There are, I think on Tuesday we've got the minutes from the Reserve Bank also. Okay, so so there's a lot kind of going on there which could impact directly on the Aussie dollar, but a breach of that support wall and she going down, right? That's where she's going. Breach of the support wall, she's going down. I'm going to be looking just sub of those walls, a little tap back to act as a trigger, and then follow through to the downside. So this is just about the Aussie dollar rolling over. Like I said, general expectation, I'd suspect one more suckers rally. If that suckers rally happens and then the price collapses, I would have a lot more confidence in this. If she just collapses from where she is right now, I'd kind of call it 60-40 still in my favor to go with that short sub-hour support walls. But that suckers rally first, it would become part of a price action pattern completion, right? So I've just got used to the idea of seeing these sucker rallies taking place before a wall is actually breached. And so when I see it happening, it kind of acts as a confirmation in my mind that the next breach is going to be the good one, right? That's what I'm that's what I'm usually looking at, right? So so that's AUD USD. Expectation is that she is going to be going further down. Quick look at the dollar Canadian. The whole thing which is going on with dollar Canadian now, and in fact, I don't think there's a pair which is weaker than, than the Canadian right now. You'd expect a lot of trouble in the euro and what have you, but what you're looking at here on the dollar Canadian chart is probably, I don't trade oil, but if there are any oil traders here, I'm sure someone will be able to confirm it, but it is probably the inverse of an oil chart, right? That's what my expectation would be. She really is losing out a lot. Now, I've been looking for points of symmetry on the dollar Canadian. There has to be a level at which this rally will complete. And she went and hit one such level right at the tail end of last week. You can kind of see it there. I just marked the low, I marked the high. She's gone and given that clean space on the underside of the wall and gone and reacted on it. So when the market opens, I'm just going to be looking to see which side of that horizontal level. You could do as good as just marking a level like that. And you know, if she closes under 3750, H4 closes under 3750, I may well be tempted in order to look for a short trade. All right. If we drop it down a little bit further, you might say, well, that was a bit of a poor call, mate, because actually support is at 37.30. So what you should have said was if we see the price go something like that and go and close below 37.30, then short the heck out of it, because there's no reason why we can't be looking at 36.50 within a few hours of that, right? So dollar Canadian supports at 37.60. A breach of that, sorry, 37.30. Excuse my ignorance there, right? So a break below 37.30, I think that makes a pretty immediate dollar Canadian short trigger. What's important about this is that it is tight, right? It's going to allow you to get a tight entry, right? So even if it's wrong, it shouldn't cost more than 25 or 30 pips in order to find out. But once that support is breached, I think there is potential there. It could open the door a little bit for some corrective price action, especially considering the rally last week. So last week's rally was almost 400 pips on dollar Canadian. It's huge, right? Now, if you're thinking about that on a weekly candle chart, right? So what happened last week was something like that. You've had a huge bullish candle. So this week, you'd expect, you know, even if there's going to be bullish follow through, you'd expect a little bit of that, wouldn't you? You'd expect that to happen on this week's candle. And so that's what I'm thinking. I'm thinking if she can do that, then that price action would kind of correlate to what's happening here. After she does this, if she comes and breaks new highs, then expect another bullish close on the weekly time frame at the end of this week, because as a rule of thumb, bull candles tend to follow bull candles, bear candles tend to follow bear candles, and so it's very antitodian very antipodean. Nice big word I learned last week. All right, it's very much the other side of the earth. Contrarian thinking to be thinking about shorting dollar Canadian right now, but if we're looking at it from a intraday perspective, and if we can get a trigger that doesn't cost us a hell of a lot in order to find out, then heck, why not? All right, it's going to be worth something, I reckon. But again, I will take a fresh look at these in the morning once the London session has started, and it would actually be a better time to be formulating this analysis. We're still looking at last week's price action right now, which, considering the market is about to open in an hour, is quite old. It's old news and old information. So that's the dollar Canadian. All right, this session is actually just carrying on and on. I'm going to speed this up a little bit. We're just going to look at two more, and then we'll wrap up because X Factor final, homeland as well. So it's gone past 9 o'clock almost. Right, where are we? Euro Canadian. I want to look at Euro Canadian and Pound Canadian. Euro Canadian I want to look at because of this. So the Euro Canadian, there is a channel, right? And I'm really liking this here channel on the instrument. The reason that I'm liking it is because it reminds me of something, right? It reminds me actually of the channel on the on the USD CHF that we traded from a couple of weeks ago. All right, so we have the lower wall of that channel. Just a second, folks. Let's see why this isn't working. Let's give it a second. The screen capture tool seems to have crashed. Right, just give me a second. I'm going to fix this. Nope, it doesn't want to fix. All right, it doesn't matter. Okay, so there's a lower channel here on the Euro Canadian. Okay, and what I'm liking about this lower channel, I just want to point out small microstructure in the way that a channel is formed. Is if we look at the starting point of this channel, what you actually see here, if I can zoom in, I'll just zoom in here. It would be nice to have been able to draw on this, right? But there's a little double bottom here in the price action. I hope it's kind of clearly visible to everyone, right? See a little double bottom there. And we move along, and there's another double bottom here on the bottom of the channel. Okay, she comes and kind of pricks that wall again, right? But quite a sharp reaction on the underside of that wall, quite a sharp reaction there, right? So it's a clean channel, it's a clean channel wall, and so the expectation is that so long as she remains inside of that channel, then the Euro Canadian is going to move higher. But once she breaches that channel to the downside, I think that there will be a very, very deep correction, and that will probably take us actually quite a few hundred pips lower, and in the first instance I'll be looking at around about 44 price handle. So we're talking about, based upon where the current price is, almost 700 pips lower. And I think so this is one out of probably all of the pairs that I'm monitoring right now. It is probably the one that I have the most interest in trading, is this one. It's the Euro Canadian, and because the structure is so clean, easily identifiable, the wall is very much confirmed, and if it's not the next tap on the wall, then it's going to be the one after that, and if it's not the one after that, it's going to be the one after that will be a breach, and when it breaches, it's going to open the door to 500 or 600 pips lower on the instrument. So I'm monitoring this one with a Hawkeye. Even when I'm away, I'll be keeping an eye on this one. I don't normally trade off a cell phone, but this one really has me tempted, or will have me tempted if I see it trade. So Euro Canadian, eyes very much on that. A breach of that lower wall would open the doors to the Euro Canadian trading significantly lower. It will probably be the first swing trade of 2016 if it doesn't happen before that. Right? So Euro Canadian, you've got to keep your eyes on that. And just to show you that kind of microstructure, this is the dollar Swiss, and here it is. Right? You've got your lower channel wall, you've got your double bottom there on the lower channel wall. Come again, another double bottom on the lower channel wall, a third double bottom on that lower channel wall. All right, and then eventually you kind of get that breakdown. And yeah, I mean on the Euro Canadian, look, this kept on going. So that channel expanded at 650 pips. We're on an hourly time frame for those double bottom walls. With the Euro Canadian, she has also gone. She's gone almost 800 odd pips. Right, so if that corrects, it's going to be a big deal. All right, if it corrects, it's going to be a big deal. Keep eyes very much on that. All right, let's just quickly look at the sister pair and we'll wrap up. Is the pound Canadian. I have I don't know how to say what I want to say about pound Canadian, but I'm looking for a reason. All right, I know it's a historical high, but I don't really trade historical highs, and so that is not enough of a reason for wanting to be short pound Canadian. So the historical high comes in just sub the 210 price handle, but there are some walls, and the price is reflecting or can be expected to reflect. She gave a tap at a reflection point early last week, and then she gave another tap right at the close of last week, and so support on the pound Canadian now is at 209. Okay, so long as she's trading above 209, the bullish sentiment that developed over the course of last week is pretty much intact. The moment she starts trading below 209, then I would very much suspect that we could get that deep correction. And this is one that rallied again, 800 pips, so 760, 770 pips last week. And so that does have me thinking, what is the weekly candle going to look like? And just on the back of considering what the weekly candle might look like, it is not unreasonable to expect that we are going to get some pullback into the previous week's candle before you can get another bullish close. And so at the beginning of the week, I'm going to be looking for that pullback, a flip at 209, and that will probably make quite a fair and reasonable trigger condition for a short trade on pound Canadian. Again, all of these Canadians I've mentioned, just remember they are counter trend. If you can't get that stop in under 40 pips, then probably don't bother. All right, so when you're fighting the momentum like that, you need to be very, very tight with your stops. On the pound Canadian, you need about 40 pips, about the same on Euro Canadian, and USD CAD you need about 30 pips, just based upon their relative volatilities and how much the price typically can travel in a regular hour. Okay, folks, right? So that's your lot, I guess. Thanks very much, all of you, for attending. Thank you again to the team at Aura FX for providing the platform. Tomorrow